Srinivas Thiruvadanthai. S&P earnings were down in the third quarter, and you say this is going to be a prelude to an actual recession, an earnings recession leading to an actual recession. Janet Yellen today, when she was testifying, she doesn't see it that way. She's going to be raising rates. Why do you see the economy in such a poor light?
Thank you, Greg. Typically when profits lead the economy and profits drive the economy, because profits are what drives businesses to hire and to expand. So they are very critical to our free market economy. And we have had an earnings decline in the S&P operating earnings 14%, NIPA earnings close to 10% down. So if you look at the past cycles, there have been only 3 occasions in which we have had earnings decline of this magnitude without a recession following soon after. So that's one of the main reasons why I expect a recession.
How will lower energy prices affect the economy in 2016? Because they're certainly helping the consumer. On the other hand, we're losing a lot of jobs in the oil patch.
That's right. So in the past, energy 5 or 10 years ago, a decline in oil prices would be an unalloyed blessing for us because we used to run a big trade deficit. So that would contract. Consumers would get a big saving on their gas bill, which they would plow back into spending on other things. We're still getting that the consumer part of it, but we don't have a big enough trade deficit. And now we also have a negative side to it because we invest so much in energy. Capital expenditure by energy companies, energy sector, was 30% of S&P capex. So it's a very big negative side that we've already seen some of it. We have seen a big decline in rig counts, but there is still a lot more capex decline coming next year. So going forward, I think it will be more of a negative because of the capex decline that's still to come.
And how will U.S. multinationals deal with the stronger dollar? Of course, today, because ECB Chief Mario Draghi didn't give the Europeans everything they wanted, the euro is getting a little bit stronger, but on the whole, it's going to be a stronger dollar, weaker euro. So tell me, how will this affect the big corporations in America?
Yeah, notwithstanding today's moves, I think you're absolutely right. The dollar has been on a strengthening trend, and we expect the trend to be stronger. Obviously it hurts earnings. It hurts earnings in 2 ways. One is the earnings that they make in their subsidiaries abroad that gets translated into weaker numbers in dollar terms. And the second is the exports, direct exports. Obviously, there is price cuts. I mean, you can see tremendous deflation in our export price index. So those are the 2 ways. I mean, there is not any easy way to deal with it. It's a fact that the rest of the world is weak.
All right, and let's talk about the debt. A lot of people say there's a huge debt overhang in the U.S., corporate debt,
yes.
Government debt. We're we're awash in debt. Do you agree with this characterization of the U.S. debt market?
Well, the corporate, yes. The government debt, yes, we have a high level of debt, but we don't think it is a problem. And we think it is a result of the weaker economy that the government debt has grown because you run up deficits and that's how you run up the debt. But coming to the corporate debt, yes, corporate leverage, the way we follow it, is at near record levels, or at least certainly close to those record levels. And more importantly, if you look at outside the top companies, leverage is actually at a record level. So the bottom 90% of the companies are at the record levels in terms of debt. And so, yeah, and that there is a problem.
Are you worried about high yield debt being the canary in the coal mine? Because we've seen high yield debt really sell off over 2015. Is it going to be worse in 2016?
Yes, I think there are three factors. One is leverage is rising. We made this point, I think, in mid-2014, that if you look historically, if you look at corporate sector leverage, it has always presaged an increase in spreads. And leverage continues to increase, so the spreads will continue to increase. Second thing is, if you look at the corporate sector, there is something called the financing gap, which is the cash flow less capex, less buyback. So essentially the money that they need to raise from credit markets to be able to do these activities. That's actually rising. That means they're more and more dependent on the credit markets just when credit conditions are tightening. So you're going to see spreads widen.
All right, so in the end, what should an investor do, considering that you see an economic recession on the horizon, you're worried about debt, you're worried about high yield, so what should investors do out there?
At the very least, they should be taking precautionary action. They should be being more defensive. Certainly, if you do want to be invested in the corporate bonds, you should be looking at quality and looking carefully at quality. And as far as, if you do want to be invested in stocks, you should be looking at defensive names for certain. And we prefer the US compared to the rest of the world, because the rest of the world is in far worse shape than the US.
All right, well, thanks a lot, Srinivas.
Thank you very much, Greg.
And thank you for watching The Street.